Hi, and good morning, and welcome again to another edition of Market Analysis for today, February the 14th. I'm Giovanni Benacourt, analyst, trader, and operator with Vantage Markets. Well, consumer prices climbed at a 6.4% annual pace in January, marking a slight slowdown from December and notching the seventh straight month of declines in the annual pace of inflation. The consumer price index increased 0.5% in January from a month earlier, the level the department reported today, compared with a 0.1% climb in December. Economists had expected prices to rise 0.5% in January from December, but that the annual increase will slip to 6.2% from 6.5%. Now, that didn't happen. Those more than expected declines were due in part to persistent strength in the cost of shelter, where rising prices accounted for nearly half of the headline increase. The Labor Department said the cost of food, gasoline, and natural gas all rose in January as well, excluding the volatile food and energy indexes, the so-called core CPI, which rose 0.4% in January. In line with the consensus expectations, core CPI is now up 5.6% over the past 12 months, coming in slightly cooler than consensus and marking its slowest rate since December 2021. Besides rising prices for housing, increasing the cost of car insurance, apparel, recreation, and household furnishings also contribute to the rise in core CPI. I wonder if dog food also uh, contributes in that too. Dog food has risen also, and eggs in the state. It's crazy. Overall, the report shows headline inflation continuing to decline from year ago levels. The 6.4% annual pace seen in January market marks the slowest increase since October 2021. But the picture is mixed. Despite months of improvement, the annual pace of core inflation remains well above the Federal Reserve's 2% target. January's 0.5% monthly increase is also the biggest jump since June, reflecting continued strength in a broad swath of categories despite the central bank's aggressive tightening in monetary policy. So, in the market is about to open in about 10 minutes. What we can see from that, so we were expecting 6.2, we got 6.5, 0.2% more than expected. Now, that kind of gives some gibberish to the market. Initially, the market did jump up, but then it retraced real quick towards it, towards where it's open. So the whole scenario of this will consider that it wasn't good, but it wasn't bad. Okay, so no news is good news, or no news is just not being staying on the sideline. So let's take a look at the market, and this is the Nasdaq daily. Look at this; it's so flat. I'm considering that today we're gonna see a very low volume day. If we do see some breakouts to the upside, I have my 12,800 real close at my resistance, real tight, and then I have my support kind of using the Friday's low. So anything today will be that as when the market opens, will we see a continuation from that movement to the upside, or will it just come in and do a small sell-off that it wasn't really that bad, but it wasn't really that good, or will it just linger around 12,500? Then the Nasdaq. Those are things that for us to consider today. The same goes for the S&P 500. 4,200 is the resistance. 4060 is a support. Would linger around 4120. That's what we'll see. As far for the Dow, that was the one that had the biggest jump when the number came out. It rose quickly to the above our 34,500 resistance that has been there for a while. It violated, but it quickly retraced. Now it's below yesterday's range, or it's actually in yesterday's range. So will we continue to see that movement to the downside? Let's see, and we'll see when it opens. Crude oil is actually pushing lower. $78 will be that's a critical support, but I have mine at $77. The RSI is kind of pointing towards the downside. Uh, will this the 21-day moving average is real close to the market, is below the market, so it'll act as a support, and I'm support. Let's see what will happen. We'll assume that the market will continue to do some sort of a sell-off. Yeah, it has been up on the tear, so profit taking. Okay, let's wait and see tomorrow's the uh, the uh, the inventory numbers coming out. So let's see what happens. Nat Gas 40 is support, 2.88 is my resistance. It's going to continue to do exactly the same as it has been doing for the last few days. Just idling, just really around a 250 marker. Then we have gold, 1850 is my support. Uh, I'm looking at it to hold it strongly. I also assume that gold will also be just moving sideways, lateral movement, consolidation. The same token goes for silver, just really bouncing out of the 2150. Not much. I would assume this is what I'm looking at. The same thing as copper for most of the market. I'm looking at this continue just really low volume, just small movements. Now let's wait on when the market opens. The indices might probably do pop, but the rest of the things will probably stay the same. Bitcoin, this very tight range, and then we have the euro looking to stay above 107, also a very tight range. Pound, the same one, looking to stay above 121.50, and the dollar index uh, really looking to stay strong around the 103 marker. But if we see the dollar index drop again, okay, then we'll see a nice pop up on the metals, the indices, crude oil. But if it does move higher, okay, if it continues to move higher, 103.50 for example, we'll see some sell-off or the markets moving lower as indices, metals. Okay, so that's the analysis for today. Have a fantastic trading day, and I will see you tomorrow, mañana. Bye now.